In this video, I'm going to answer the question, are we heading for a big recession in the UK? Are we going to get stagflation? And what's the effect going to be on your property investing? So my name is Simon Zutshi. I'm the author of Property Magic, the Amazon #1 property bestseller. I'm the founder of the Property Investors Network, the first and the largest network of property meetings around the country. So what that means is I've got my ear to the ground and I can hear what's going on at a grassroots level. I'm going to share some of the information with you in this educational video. So let's think about what's happening in the UK property market right now. We all know that we have massive inflation, typically 9% at the time of recording this video. That's the official figure. I mean, I don't know about you, but I think actually inflation is far more. If you look at the cost of goods in the supermarket, look at the cost of how much fuel, petrol is going up, energy costs are rising. Last year in 2021, rents went up as much as 20%. Now, inflation is generally seen as a bad thing for most people because it means everything becomes more expensive. Now, inflation normally happens when everything is going really well. You know, companies are expanding, they're employing people, you've got low unemployment, high GDP from the country, and everything's doing really well. However, I believe the inflation we're having right now, and this is just my view and no one really knows, the inflation right now is driven not just because the country is doing really well. In fact, I question if it is or not. I think we have some other issues that are causing problems. So for example, we have the crisis in Ukraine, which is causing the energy prices. We've had the COVID-19 pandemic and all the supply chain issues that's caused. Sometimes you want to buy something in the shops, well, you can't actually buy it because it's not there, and people are then prepared to wait, and people are paying more money for things. Add to it all the quantitative easing and the money's being printed, there's lots of money out there. So what does this actually mean for you as a property investor? Well, obviously, raising interest rates is the way that the Bank of England normally counteracts high inflation. They rise interest rates to slow down the economy. And we've seen at the beginning of June, we saw the interest rates go up again, and they've gone up another 2.5%. So in other words, 1.25% is the current Bank of England base rate. Interestingly, of the 9 members on the board, 3 of them wanted to put the rates up by 0.5%. So it looks like we're going to see further rates going up. Now, bear in mind, the government has borrowed and printed so much money, the government doesn't really want the base rates to go up much because it's going to cost them a lot more money to service the interest on all of the loans they have. So there's a bit of pressure on the Bank of England to keep the rates down. But there's a real danger we could get what's called stagflation. Now, stagflation is when we have high inflation, but also you have a declining economy. You have high unemployment. And actually, I think that's something that no one knows what's going to happen. It's just a guess, but I think there's a possibility we could see that. So how do you protect yourself against that? I'll explain that in this video. So we've got this high inflation. The official figure is only 9%, although I think it's much more. By the way, this is happening around the world. It's not just here in the UK. Interest rates are going up. Now, the biggest impact of interest rates going up for property investors is obviously we have mortgages, we're borrowing other people's money to invest in property, and the mortgage companies, they might give us a fixed period for a certain amount of time, but a lot of investors, we're on a variable rate. What that means is the Bank of England base rate goes up, our monthly interest costs go up, which means we make less cash flow every month. Now, back prior to the credit crunch, in 2006, 2007, we had interest rates about 5.5%, 6%. And those are the kind of rates that we're used to paying. And then when the credit crunch happened, the interest rates all came down. And actually, for pretty much the last 8, 9, 10 years, we've had a very, very low interest rate of just 0.5%. Now that means that many property investors have benefited from this and had very, very good cash flow from their properties. But if interest rates keep on going up, it means the average investor is going to be paying less and less profit on their property, and so they're being squeezed. And there's a possibility that some people who own properties in their own name, because of Section 24, which was, I've done videos about this on the YouTube channel when the government decided to change the way that we as property investors are taxed. What it means is, if you have property in your own name and you're a high rate taxpayer and you've got mortgages, which many investors are or have, what it means is that on paper, you could be making money from a tax point of view, but because interest rates have come up and your cash flows come down, you could actually be losing money each month. So each month you're losing money. You're having to subsidize your property, but on paper, you're making money. You've got to put your hand in your pocket and you've got to pay the tax man for that alleged profit. So what this means is that many property investors, and we've seen this over the last few years, many amateur investors are deciding, you know what, it's not worth having buy-to-let properties anymore. They've got one or two. The costs are going up, there's increasing regulation, there's the talk about in 2025, the requirement for EPCs to be a C rating or above, and most properties are only E or D, so landlords are going to have to spend money to improve their properties in order to rent them out. All these factors are putting pressure on landlords, and we're seeing more and more landlords selling up. That's one of the reasons why over the last year we've seen rents go up, because there was not enough rental accommodation. That's great if you own properties, you rent them out, not so good if you're trying to find somewhere to rent. But the point is, with less supply and increasing demand, rates will go up. Now, what does this mean for property prices? Well, if we have lots and lots of landlords, and there are about 2 million landlords in the UK, if many of those landlords say, well, it's not really worth me being in property anymore, and if I look at the last 12 years, I've had a fantastic capital growth, we're going to see more and more landlords selling up their stock. So more and more landlords selling, that stock's going to come onto the market. Now, are we going to have a big crash? Well, I'm not sure. It depends if we go into a big recession or not. Because if landlords are looking to sell their property, and if there are lots of people willing to buy them, we might be okay. Prices might continue to go up. And long term, in the UK, property prices go up because we live on an island with a limited amount of accommodation and an increasing population. That generally is the trend. However, property prices don't always go up. And anyone who's only been investing for the last 10 years might feel, oh, prices keep going up. But that doesn't happen. That's a trap people fell into in the mid-2000s when people were buying properties that didn't really stack up. They didn't give rental profit. And so they were subsidizing those properties, thinking they would go up. Then the credit crunch came, 2008, 2009, everything came down. So I don't think people are going to make that same mistake again. Well, I hope not. But I've got a couple of things I want to share with you on what I believe you should be doing right now to protect yourself and get ready in case we do get a market crash, in case we do get a recession. Now, the problem with putting interest rates up is that it restricts companies. Companies can't afford to grow and expand. They don't take people on. And also, if we have the situation where people can't afford living and they can't afford to pay their mortgage, we might see more properties getting repossessed. So you've got landlords looking to sell their properties. You've got people can't afford to hold their properties. They might get into difficulty and have to sell some of those. All of these mean more stock coming onto the market. So we could see prices come down. Now, we might just see prices level out and start to dip a little bit. I don't think they're going to crash massively because of this underlying demand that we have. But if prices just correct and start to go down a little bit, I think you might see lots of landlords who are very keen to sell because they remember the crash that happened in 2008, 2009. So what this means is, this is good news for you if you're looking to acquire more property. If the market does start to tip, there might be some landlords who are very happy to negotiate good discounts to buy their property because they want to sell it quickly before or they think it could come down a long way. So there's going to be some great buying opportunities even if the market just tips a little bit. Now, when the market's tipping and starting to come down, many people might lose their nerve and think, well, do I really want to be buying if the market's coming down? You've got to make sure you're thinking long term. Don't think short term. Nobody knows what's going to happen to property prices. I don't know, you don't know if there's going to be a UK property market crash. Nobody knows. The danger is people think, well, I tell you what, I'm not quite sure, so I'm just going to sit back and I'm going to wait. Now, the big problem with that is I know people who've been waiting for years and years for the next property crash to come, and frankly, they've missed out on years and years of capital growth. So my advice is that just get out there, look for great property deals. A big tip we share is don't look for properties, instead look for sellers, the motivated sellers who are more flexible on the price and the terms. Work with finding, helping, solving problems for those motivated sellers, coming up with an ethical win-win, so you give them what they want and then we get what we want as well. And they're far more inclined to give you what you want if they get what they want. So look for the motivated sellers, use that to get some great deals, and bear in mind that if prices do come down, people worry that, well, if I buy something now and the market does come down, it might be worth less money in 12 months. So they think they might have lost money. Well, you haven't lost money unless you need to sell that property. And if you follow the 5 golden rules that I talk about in my book, Property Magic, you can minimize the risk. So let me remind you what those rules are. So rule number 1, we want to buy from motivated sellers. Rule number 2, we only buy property in areas with strong rental demand. There's not enough rental property at the moment, so generally in the UK, that's good, but area specific, obviously. Number 3, we only buy for positive cash flow. Now this is really important. I want to make a really big point here. Many people invest in property for the long-term capital growth, and that's what's going to make you really wealthy over the long term. However, if we do get stagflation, if we do get a bit of a market correction, property prices may not go up for the next few years. So instead of gambling and speculating on prices going up, instead I teach my students to buy property as if prices are never going to go up. Now, we believe they probably will, but if you buy as if prices are not going to go up, what that does, it gets you focusing on only buying properties that make you money right now, today. They give you cash flow, in other words. So that's rule number 3, buy property for cash flow. Rule number 4 is we're buying for the long term. Now you can make money short term, buying a property, doing it up, flipping it on, and that's been very possible in this rising market. But actually, if the market is going to turn, we don't know, but if it does turn, the strategy of flipping property may not be such a good one. So instead of doing that, look to buy properties you're happy to hold a long term. And then it doesn't matter if the prices come down next year because you're holding long term. Rule number 2, you can rent them out. Rule number 3, you're making cash flow, so you don't need to sell those properties. Now, the other thing you need to do to protect yourself is what I am doing on the properties that I'm buying and the properties I'm refinancing. I'm fixing the interest rate. I'm fixing it for 5 years if possible. Now, that means I might pay a slightly higher rate, but I'm just taking out the uncertainty. I know exactly what my interest is going to cost me for the next 5 years, and I'm very happy to have that peace of mind. And so I think that's a very good way to protect yourself, because we might get more inflation, we might get higher interest rates, and I want to make sure that all my properties still make really good money for me. The other thing is, a lot of people use equity in existing properties, their own home or investments, to buy their investment properties. Now, if the market does tip, because we go into recession and people can't afford to hold their houses and all that stock comes on the market and all these landlords looking to sell as well, that could cause the market to come down. If that does happen, lenders might not want to lend the same loan to value, and some lenders stop lending completely. So while the times are still good, now is absolutely the time. If you decide that you want to use the equity in your properties, and that's your decision obviously, but if you decide to do that, I recommend that you actually get on with that and refinance and take the money out so that you are in a cash position ready to move when you find good deals. And if you find a good deal that meets your personal criteria, don't sit around waiting for another better deal to come along. Use your money on the deal as long as it works for you. Because if a better deal comes along later, because it's a better deal, better cash flow, better return on investment, that means you could actually use someone else's money to fund that deal, give them a good return on their money, and you still make a profit. And I believe with the high inflation rates we've got and still the relatively low Bank of England base rates, the gap is huge. What that means is anybody who's got money in the bank right now, they are losing money. They're losing money hand over fist. And anyone who's got money in the bank, they must be aware of high inflation and they want a better solution. And you can give them that solution. So I don't think there's ever been a better time than right now to use other people's money. Now, obviously you need to know what you're doing. You need to be careful. You've got to build a relationship and trust with those people. But there are people out there who have a real problem. They've got money in the bank doing nothing. And you can help solve that problem. So for me, I think although there's massive uncertainty, no one knows what's going to happen to inflation, although I think it's probably going to go up. No one knows really what's going to happen to interest rates, although I think they're probably going to go up. No one really knows what's going to happen to property prices. I think they'll level out and maybe dip, not crash, but dip a little bit. And it's not so much a crash, it's more a correction. They've been very high for the last couple of years, and more about bringing them back in line. But we want to be ready to move and make the most of what I believe is going to be an incredible buying opportunity. Will the UK go into recession? Well, it kind of depends. If we go into recession, And what that means is people are losing jobs, people are holding back on their money, there are going to be more and more people wanting to sell properties. So actually it's an opportunity for us, an opportunity to find people who we can help and give that ethical win-win solution. So my final point I want to make is you've got to be very careful when listening to the news. It's very easy to get drawn into that and worry about things that could happen or may happen. But my point of view is stop worrying about things that you have no control over. And I know that's easier said than done sometimes, but focus on your world and what can you influence, and those are the things you need to focus on and maybe worry about. Stop worrying about things you can't do anything about. What's going to happen is going to happen. We just need to adapt and flex and make sure we can protect ourselves in those times. So I still believe investing in property, investing in real estate is one of the best things you can do as long as you know what you're doing and as long as you're following the 5 golden rules that I talk about in Property Magic. So a couple of things you can do is rather than listening to the news and the negativity, get yourself into an environment, a positive environment where you can learn from other people and see what other people are doing, be inspired by them. So come along to our Property Investor Network meetings. And also we have training, online training, we have physical courses as well. You know, learning how to invest successfully is going to save you a huge amount of time and money. And it's when markets are coming down, if you don't know what you're doing, that's when some people lose money, but actually it's one of the best times to make money. So my message is get ready. Doesn't matter what's happening, get yourself ready so you can make the most of whatever happens in the market. So I do hope you found this useful. If you liked the video, please like it, put a comment below. I'll come and respond to as many as I can. And make sure you subscribe to the channel as well. And until next time, I encourage you to always invest with knowledge, invest with skill. I do hope you enjoyed that video. Now, before you go, I'd like to invite you to come and join me on an emergency webinar. We're going to be sharing exactly what's happening right now and how you can make the most of what's happening and also protect yourself against the downside. This is probably one of the most important things that you need to know how to be a successful property investor. So click on the link below. I look forward to seeing you on this emergency webinar. Invest with knowledge, invest with skill.